Hello students, welcome back to Accounting 2302, Managerial Accounting. I am Dr. Mercado speaking, and in today's lecture we are going to be covering exercise 2214. This problem does not have a show me how video in Cengage, so I decided to do a short video to illustrate how to complete it, and hopefully it helps answer any questions that you might have. Now the problem deals with manufacturing overhead cost budget. Okay, now like I say every lecture that I try to record, it is very important that we read. Okay, reading needs to happen before you begin working on your assignments. Once you are working on a problem, for example, this one deals with manufacturing overhead cost budget, objective 4, you need to go back to that section of your ebook and reread that section and review the information provided. Okay. So I've got the information here straight from your ebook dealing with manufacturing overhead cost budget. Now, the manufacturing overhead cost budget estimates the cost for each item of manufacturing overhead needed to support budgeted production. So these are people that are not doing production, they support the production process, okay? So they provide you with an example there, okay? The manufacturing overhead cost budget may be supported by departmental schedules. Such schedules normally separate manufacturing overhead costs into fixed and variable costs, which is what we're going to be working on. Okay, so this is a little bit different than what we're going to be doing because we are going to be separating our report based on the fixed and variable components. Okay, the manufacturing overhead cost budget should be integrated with the production budget to ensure that production is not interrupted during the year. Okay, so here we have the problem. We're going to go ahead and we're going to read it and then we're going to put it together. Okay. So it says Anderson Candy Company budgeted the following costs for anticipated production for October. And then we're given the advertising expense of $234,000, manufacturing supplies of $14,000, power and light $50,000, sales commission $298,000, factory insurance $35,000, production supervisor wages $140,000, production control wages $32,000, executive officer salaries $420,000, materials management wages $39,000, and factory depreciation. We prepare a manufacturing overhead cost budget separating variable and fixed costs, so we have to separate them. We're going to assume that factory insurance and depreciation are the only two fixed costs, okay? So they're telling you what your fixed cost is. You basically have to figure out what your variable cost is. Now, when I begin these problems, they give you more information than you need, okay? So you have to be able to segregate what is it that we're going to use and what is it that we're not going to use, okay? So I'm going to mark off the things that do not relate to a manufacturing overhead cost budget, okay? The first thing is advertising expenses, okay? Advertising expenses are not related to the manufacturing overhead cost budget, okay? Advertising expenses go into your selling expenses, your selling and admin expenses, okay? So that one does not apply. That goes under selling and admin, okay? Now let's continue looking. What else does not belong here? Okay, something pops up to me. Executive officer salaries. Okay, that has nothing to do. These are the executives in the company. They're making quite a bit of money, $420,000. That has nothing to do with the manufacturing overhead cost budget. So we're gonna go ahead and we're gonna mark those off. Okay, because that does not apply to the report that we're working on. So we're gonna scratch that off. Okay. What else do we have? Okay, we also have sales commissions. Okay, under the manufacturing overhead costs, commissions are not included. Okay, that goes under your selling and admin expenses. Okay, so let's write that off. Sales commission does not apply to this problem. Okay, so we've got advertising expense, we've got sales commission, and we've got the executive officer salaries. Now those three, I'm going to make a note down here. That way you know why I'm not including them, okay? So advertising expense, sales commission, and executive officer salaries are selling and admin expenses. Okay, so they do not apply to what we're working on, which is our manufacturing overhead cost budget. Okay, Now that we have eliminated the three items that do not relate, we know that we're going to be using everything else, okay? Now we're going to be splitting it into the variable, manufacturing overhead costs. And I'm going to show you, this is how I solve my problems. First, eliminate what it does not apply, which we've already done. Then we're going to set it up. We're going to have our variable, and then we're going to have our fixed. Okay, hopefully I have enough cells there. We're going to have our fixed manufacturing overhead costs. Okay, now what do I know? They're telling you here in the problem that we're going to assume that factory insurance and depreciation are the only fixed costs. So they're telling you what the fixed costs are, so I'm going to put those in there. So we're going to start off with our factory insurance. Okay. Factory insurance is $35,000. So I'm going to be marking them off as we go. Okay, so factory insurance is going to be used, and that one is $35,000. The problem also says that a fixed expense is your depreciation. Okay, so we're going to have factory depreciation. My depreciation is $25,000. Okay, so I've already used the depreciation over here. So those two are your fixed. Okay, so we're going to go ahead and we're going to get the total. Okay, so we're going to add those two. And that gives me $60,000. Okay, so now we're going to do the variable. Okay, so the variable basically is anything that you have left over. We already identified that advertising, sales commission, and executive office salaries do not belong here. They are selling and admin expenses. The problem itself told you that factory insurance and factory depreciation were the only two fixed costs that you have. So that means everything else will be a variable expense. Okay, so we are going to start off with our manufacturing supplies. Okay, so we've got manufacturing supplies of $14,000. We have the power and light. We need that to run the company, the processes. So we've got $50,000 in power and light. Okay, we've got the production supervisor wages. Now they're supervising the actual production of the goods. Okay, they're not actually making anything. Okay, so production supervisor wages is $140,000. These are people that are just overseeing the process. They're not actually manufacturing anything. They're overseeing. So the production supervisor wages is $140,000. Okay, and then we have production control. These are the people that basically quality control. They review that everything that has been manufactured is up to standard. They don't produce anything. They just verify. They do controls over the goods. Okay, that's $32,000. And then we have the materials management wages. These are the people that manage the materials. Okay, they don't do anything. They don't produce anything. They just manage. They allocate the materials. They make sure that everything's ordered, that everything's received, that everything's sent to the right departments, so on and so forth. That's $39,000. Okay, so those are all of my expenses, my variable manufacturing overhead cost. Okay, so now that I have that, I can calculate my total variable manufacturing overhead cost. So we're going to add all of our costs right there, manufacturing variable. That gives me 275. I've got some extra cells there. I'm just going to delete them. Okay. Okay, so that gives me my total for my variable and my total for my fixed. Now I'm going to go ahead and I'm going to do my total manufacturing overhead cost. That includes variable and fixed. Now for this, you're simply going to add your total variable plus your total fixed cost. And that gives you $335,000. Remember, when you're preparing your budgets, The first row is used if you have multiple items. If you have more than one item, you have to put them in the first row, add them together, and carry the grand total to the second. In the second column, you will only have grand totals. If you only have one item, then you can carry it to the second column, okay? But if you have multiple things going on, like we did here in the variable and the fixed section, we have more than one. We group them together in the first row, and then we take the total to the second row, and then we add the totals, and that will give you your total manufacturing overhead cost of $335,000. Okay, so very easy. Do make sure that when you are working these problems, you read them carefully. You understand what the problem is asking. Eliminate any data that you don't need. That way you don't get confused. The problem told us in this case what were our fixed costs, so we were able to identify those two fixed costs. That means everything else that is left over is your variable manufacturing overhead cost. Okay? So I hope this provides some clarity. Make sure that you do read your ebook. As you're completing your problems, you refer to it for examples, illustrations. If you have any questions or concerns, please do not hesitate to contact me through Blackboard, email, or Pronto. Just make sure that you provide the problem that you're working on, your specific questions, and if possible, your step-by-step solution so I can review and provide guidance. Okay, so that is it for this lecture. Until next time, have a wonderful day.